Namaskar and welcome to Sansad TV. I'm Rajiv Kumar Singh and you have started watching our special series, History Behind Headlines. Recently, Finance Minister Narendra Modi announced a wide-ranging set of reforms in the Goods and Services Tax, now being referred to as GST 2.0. These reforms are expected to influence every section of society and reshape the way taxation is experienced in India. In this episode, we will examine the key provisions of GST 2.0, their intended impact and the challenges ahead. We will also trace the global journey of taxation reforms, looking at how similar models were introduced in other nations and how they evolved over time. So, let us begin our exploration of GST 2.0, India's tax revolution, in this episode of History Behind Headlines. Independence Day. Prime Minister Narendra Modi made a promise from the ramparts of the Red Fort, a promise of a brighter and happier Diwali this year.
साथियों, इस दिवाली में आपकी डबल दिवाली का काम मैं करने वाला हूं। इस दिवाली में आपको एक बहुत बड़ा तोहफा देशवासियों को मिलने वाला है। पिछले 8 साल से हमने जीएसटी का बहुत बड़ा रिफॉर्म किया। पूरे देश में टैक्स के बर्डन को कम किया, टैक्स की व्यवस्थाओं को सरल किया और 8 साल के बाद समय की मांग है कि हम एक बार उसको रिव्यू करें। हमने एक हाई पावर कमेटी को बिठा करके रिव्यू शुरू किया, राज्यों से भी विचार विमर्श किया और मेरे प्यारे देशवासियों, हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं। ये दिवाली के अंदर आपके लिए तोहफा बन जाएंगे। सामान्य मानवीय की जरूरतों के टैक्स भारी मात्रा में कम कर दिए जाएंगे। बहुत बड़ी सुविधा बढ़ेगी। हमारे एमएसएमई, हमारे लघु उद्यमी, इनको बहुत बड़ा लाभ मिलेगा। रोजमर्रा की चीजें बहुत सस्ती हो जाएगी।
This assurance came at a time when America's tariff turmoil was unsettling global trade and weighing on Indian exports. For a country like India, not heavily dependent on exports, the full impact of US tariffs on the average citizen may only be felt in the long run. But what is absolutely clear is that GST 2.0 will directly touch the life of every Indian. And the fact that Finance Minister has rolled it out well before Diwali gives citizens one more reason to cheer. It was the stroke of midnight on July 1st, 2017. In a moment reminiscent of India's tryst with destiny, the Goods and Services Tax, GST, was unveiled. Hailed as the most ambitious tax reform since independence, it promised to sweep away a tangled web of state and central levies, replacing them with a single, unified structure. 8 years later, in September 2025, GST has undergone its biggest transformation yet. Finance Minister Narendra Modi announced a major rationalization, slabs reduced, rates cut, and essentials made cheaper. Some call it Modi government's boldest economic reform of its third term.
The Honorable Prime Minister actually set the tone for the next generation reforms on the 15th of August when he spoke from the Red Fort. And he desired that we give the benefit to the people at the earliest. He mentioned Deepavali. This reform is not just on rationalizing rates. It's also on structural reforms. It's also on ease of living, so that businesses can do their business of working together with the GST with a great ease. So we have corrected inverted duty structure problems. We've resolved classification related issues, and we have ensured that there will be stability and predictability about the GST.
What does the whole exercise mean for India's middle class, the upper class, for small businesses, and for exporters facing Trump's tariffs? To understand, we must first retrace the long, winding journey of GST in India. The idea of GST in India was first mooted in 2000 under the Vajpayee government, which set up an empowered committee to study the matter. The task force proposed a comprehensive tax that would unify India's fragmented system of excise duties, service tax, VAT, entry tax, octroi, and more. However, the legislative process faced numerous hurdles. Political differences delayed progress. Successive finance ministers, Jaswant Singh, P. Chidambaram, Pranab Mukherjee, spoke of it. Yet, the legislative to and fro, resistance from states fearing loss of revenue, and lack of consensus kept the reform on hold. The federal structure of India's democracy required a constitutional amendment and consensus among the states. The Constitution 115th Amendment Bill related to GST was introduced in 2011 by the UPA government, but it lapsed with the dissolution of the 15th Lok Sabha in 2014. When Narendra Modi assumed office in May 2014, the idea of GST regained momentum. Having served as Gujarat's Chief Minister, Prime Minister Modi understood the state's concerns. His government engaged in consultative approach, which included reaching out to opposition leaders to build a bipartisan agreement. Prime Minister Narendra Modi's government crafted the GST Council, a federal institution where the union and states shared power. The GST Council comprised of the Union Finance Minister and State Finance Ministers, a key step that helped build trust and reach a consensus on tax rates and other matters. Every rate, every change required consensus, not unilateral diktat, and the GST was introduced as the Constitution 122nd Amendment Bill 2014. After being passed by both houses of parliament and ratified by more than half of the state legislatures, it received presidential assent and was enacted as the Constitution 101st Amendment Act 2016, paving the way for its final rollout on July 1, 2017. It was hailed as one of the biggest economic reforms since India's independence. One nation, one tax. GST brought together a wide range of indirect taxes under one umbrella. It replaced levies like excise duty, service tax, VAT, and others. This helped remove the cascading effect of taxes and brought consistency in the tax system across the country. Dual structure. The GST system is designed with a dual model. It includes central GST, that is CGST, and state GST, that is SGST, for transactions within a state. For trade between states, integrated GST or IGST applies. Input tax credit, ITC. Businesses can claim credit for taxes paid on inputs. This prevents tax on tax and reduces costs across the production and distribution chain. Threshold exemption. Small businesses with turnover below a certain limit are exempt from GST. This makes compliance easier and protects micro enterprises from excessive paperwork. Before GST, goods moving from one state to another face multiple taxes and checkpoints. A truck spent hours, sometimes days, waiting at state borders. Logistics costs ate up nearly 14% of GDP. GST dismantled that barrier. A product manufactured in, say, Maharashtra could move seamlessly to Assam without hidden levies. Tax credits ensured there was no cascading of taxes. India was now one common market. But reality was messier. GST began with 5 slabs: 0, 5, 12, 18 and 28%. Businesses complained of complexity. Small traders struggled with online filings. Technical glitches plagued the GST network. Protests erupted. Yet over time, the system matured. Compliance improved, collections stabilized, and digital tax culture took root. In 2024-25, GST recorded its highest ever gross collection of 22.08 lakh crore. GST revenue had crossed 1.84 lakh crore a month on average. In 2020-21, the total collection was 11.37 lakh crore with a monthly average of 95,000 crore. The government has now unveiled GST 2.0. The old 5 slab system has been reduced to 3 main rates, plus the luxury bracket. A wide variety of products are set to become cheaper. The reforms aim to simplify the tax structure by moving most items from the higher 12% and 28% slabs into the new simplified 5% and 18% slabs. A new 40% slab has been created for luxury and sin goods. This category includes most essential daily necessities. Items in the slab are either completely exempt from GST or have had their rates reduced to 0. This includes unpacked food items like fresh fruits, vegetables and milk, essential services like personal health and life insurance, and certain educational services. Indian breads like chapati, roti and paratha, stationery like exercise books, notebooks and maps, life-saving drugs and certain diagnostic kits, unbranded flour, salt and prasad. This is the slab for common household items and other necessities. Many products that were previously taxed at 12% and 18% have been moved to this lower slab. Packaged food items like butter, ghee, cheese, pre-packaged paneer and a variety of snacks like namkeens and bhujia come in this category. This category also includes personal care items such as hair oil, shampoo, toothpaste and soap, footwear and certain apparel, agriculture machinery like tractors, sprinklers and irrigation equipment, hotel stays with tariffs up to Rs 7,500 per day, services such as gyms, salons, barbers and yoga. This slab now serves as the standard rate for most other goods and services, absorbing items previously in the 28% slab. This includes consumer durables like air conditioners, televisions, refrigerators and washing machines, small cars below 1200cc and two-wheelers below 350cc, cement and other construction materials, most services like banking, telecom and restaurant services. The rationalization is primarily a consumer-centric move. Common Indian consumers and middle class will be the biggest beneficiaries. The reduction of taxes on household essentials, daily toiletries and consumer durables will directly lower their cost of living. Lower GST on items like two-wheelers and small cars will make personal transportation more accessible. The shift of life and health insurance premiums to the 0% slab is a significant step towards increasing financial protection for the population. Education benefits. The school fees remain tax-free. Skill development courses are exempt. Digital learning platforms face just 5% GST, encouraging affordable skilling. Students and young professionals see laptops and mobile phones cheaper at 18% instead of higher brackets. Eating out whether at budget restaurants or mid-range cafes, is more affordable at 5%. The middle class, which felt the pinch of high inflation in recent years, now finds breathing space. For the upper class consumers, the picture is different. High-end cars, premium hotels, imported wines, designer clothing remain in the high GST category. In fact, many luxury items and sin goods have been moved to a new, higher 40% GST slab. The government has made it clear, rationalization is not a subsidy for luxury, but the upper class still benefits indirectly. Affordable services mean their staff, drivers, domestic helps, caregivers face lower living costs. More disposable income in middle class hands boosts consumption, lifting businesses that also serve the rich.
Rural India gains significantly. Fertilizers, pesticides, farm machinery now attract just 5% GST. Cheaper input costs increase farm margins. Rural households benefit as soaps, detergents, footwear and clothing all move into the lower bracket in terms of GST. This is a significant reduction from previous rates which were as high as 12% or 18% on some items.
Cheaper farm equipment encourages mechanization, raising productivity. For the first time, GST reform is seen not only as an urban measure but as relief for villages. The small trader once called GST a nightmare. Filing returns online, navigating multiple slabs and waiting endlessly for refunds drained them. GST 2.0 eases this pain. With just 3 slabs, billing is simpler. Refund cycles are shorter. The compliance burden is eased through AI-driven filing systems introduced by GSTN in 2025. Kirana stores see clearer pricing. Textile units, once hit by 12% GST, now thrive under 5%. Artisan clusters in Rajasthan, Bengal and Tamil Nadu benefit from reduced rates on handicrafts. MSMEs, which employ over 100 million Indians, gain predictability, essential for long-term survival. India's services sector, half of the GDP, was hit hard by 18% GST in the early years. Now, the rationalized rates give relief. Restaurants, gyms, salons, daily urban services drop to 5%, fueling demand. IT services remain at 18%, but export rebates improve. Call centers regain competitiveness in global markets. Tourism revives with budget hotels exempt, mid-range hotels cheaper. Lakhs of jobs in hospitality stand to return. The rationalization carries a gender dimension, reaffirming earlier reforms. Essentials, detergents, packaged food, LPG stoves are cheaper, easing household budgets. Women-led businesses benefit. Tailoring shops, beauty parlors and handicrafts pay less tax. Self-help groups in rural India producing pickles or garments now find GST compliance manageable. When women save, families thrive. GST 2.0 subtly empowers household decision makers. Automobiles, two-wheelers and EVs at 5% GST spur green adoption. Luxury cars remain expensive. Healthcare, life-saving drugs and insurance at 0% reduce treatment costs. Hospitals see higher demand. Education, skill courses exempt, e-learning cheaper. India's youth gain tools for the future. Tourism and hospitality, restaurants, travel services at 5% rejuvenate domestic tourism. Real estate, Affordable housing units taxed lower, easing dreams of home ownership. Each sector feels the reform differently, but together they echo one message: affordability. GST, or a value-added tax, VAT, is a common form of indirect tax in most developed economies. The key difference lies in the number of tax slabs and the rate of taxation. Many developed countries, particularly in Europe, have a single, high standard VAT rate with a few reduced rates for essential goods. For example, France, the first country to adopt a VAT system in 1954, has a standard rate of 20% with reduced and super reduced rates for food and other essentials. New Zealand has a single, flat GST rate of 15%. The minimal exemptions makes it the simplest model. Canada operates a dual GST model similar to India, with a federal GST, that is 5%, and provincial sales taxes, which are harmonized in some provinces to form the Harmonized Sales Tax, HST. Singapore started at 3%, now it is at 9%. It pairs every hike with subsidies. In Australia, the GST rate is flat 10% since 2000. It is transparent and is widely accepted. In the European Union, VAT dominates. There are 2 or 3 rates, which is simpler than India's earlier 5-slab mess. The trend in developed economies is often towards fewer slabs, as it simplifies administration and reduces classification disputes. India's GST remains more complex than these, but GST 2.0 narrows the gap. With just 3 slabs, India edges closer to global norms.
For next 4 to 5 years, I believe that the GST Council and governments of different states and union government, they would like to see what kind of implication this simplification is going to have on revenue inflow, GST revenue inflow, as well as on the economy. So there will be a 4 to 5 years. GST Council would like to observe it, and once they get kind of some sort of confidence that revenue is kind of stabilizing, then there may be a consideration to moving towards 2 slabs or at least 3 to 2 slabs.
Reforms of this scale demand consensus. States initially resisted, fearing loss of revenue, but the centre extended compensation and the GST Council achieved compromise. Politically, GST 2.0 has Prime Minister Narendra Modi's stamp all over. He piloted GST through Parliament in 2017. He absorbed criticism through turbulent years. Now, in his 3rd term, he has simplified it. Supporters hail him as the architect of One Nation, One Tax. Critics argue that the early chaos hurt small traders. Either way, Modi and GST are inseparable in India's economic story. Donald Trump's 2nd presidency has revived tariffs on Indian exports, textiles, gems and jewelries, steel, engineering goods. GST rationalization cushions the blow from America's tariffs. Lower domestic taxes can reduce production costs, keeping exports competitive despite tariffs. At the same time, rising domestic demand absorbs excess supply. GST rationalization, in a way, is India's quiet answer to American protectionism. Strengthen internal markets while remaining resilient abroad.
It's a long-term trend which this government has been following, where the focus has been on improving our domestic capacity and attracting investment. So we have kind of unleashed a series of reforms there, and I see this in the continuity of that. But it will definitely help us to navigate the current external situation which we are in. But as far as the pure motive is concerned, it's not primarily driven by the US tariff, but rather it's a continuation of what we have been doing for last 10, 12 years.
Critics warn of state revenue shortfalls estimated at rupees 48,000 crore annually on the FY 23-24 consumption base due to rate cuts. Digital compliance remains tough for micro enterprises. Some economists fear surging demand may spike inflation. Any revenue loss could be offset by increased tax buoyancy, improved compliance, and a boost in consumption from the rate rationalization. Most agree GST 2.0 is simplification without populism. Essentials get cheaper, luxuries stay taxed, and the system grows more transparent. What lies ahead? Experts predict India may move towards just 2 slabs or even a single rate GST. Artificial intelligence could make compliance seamless, reducing evasion. Integration with global tax norms may ease trade disputes. A decade from now, or even earlier, GST 3.0 may look more like New Zealand's. Clean, uniform, universally accepted.
The Goods and Services Tax began as a dream of simplicity, of fairness, of one unified market. Its journey was turbulent. It drew criticism, sparked protests, and tested India's federal spirit. Yet, step by step, GST has evolved. GST 2.0 in 2025 simplifies, rationalizes, and humanizes the tax. For the middle class, it eases budgets. For the poor, it makes essentials affordable. For businesses, it builds stability. And for Prime Minister Narendra Modi, GST is not just policy, it is legacy. When future generations look back, they may not see GST as merely a tax. They may see it as the foundation stone of India's rise as an economic superpower. That is all we have in this program. Thanks for watching.
To watch more programs of Sansad TV, subscribe to our YouTube channel and don't forget to like and share them.